Hi, and welcome to another episode of the Michael Yardney podcast. Today, we're exploring something every serious property investor needs to understand, not just where the market is now, but what's driving it and what's ahead for our housing markets. Now, you've probably noticed it's a confusing time out there. Sure, interest rates are falling, but there are mixed messages about how many rate cuts we're going to have, when they're going to occur. Yes, population growth is surging, but we're not building enough homes. And the media is full of mixed messages, and many would-be investors are paralysed by uncertainty. So that's why in today's show, I'm joined by my business partner, Brett Warren, Director of Property at Metropole, to unpack the 9 biggest influences shaping our property markets in the year ahead. Now, we're going to discuss the real levers behind property market movements. We're also going to have a little look at history to see how these have affected things in the past. So whether you're a seasoned investor or you're just looking to make sense of the shifting markets, I believe today's conversation is going to give you clarity, confidence, and a clear strategic edge. So let's get on with the show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect, and pass on your wealth through strategic property and wealth advice. Now, here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Brett, welcome back to the show. There's so much confusion in the market right now. I'd like to actually allow our listeners and viewers to get some clarity on what's going on.
Thanks, Michael. Good to be with you. And look, there absolutely is. There's some good things happening and some positives happening, but maybe we can clear a few things up to I guess, give people a bit of a pathway forward and give them some reassurance of what's going on.
Well, what I'd like to go through with you is the 9 big influences on our property markets heading forwards. So we'll break them down one by one, and I'd love your thoughts on it. Now, one of the big factors, of course, is population growth. There was something like 440,000 people migrated to Australia last year, not as many as the year before after the floodgates opened after COVID, but that's pushed housing demand through the roof. What are you and your team seeing on the ground? How's this impacting buyer and renter behaviour?
Look, it's absolutely amazing. I don't think I've seen the fundamentals so one-sided, Michael. There's this huge demand for property, and we're talking about multi-offer situations, 10 or 15 offers on properties, all the way through to increased rental queues and people, applying for rents, because there's just nothing happening there, particularly in those middle and outer ring suburbs. People are pushing out now because, it's affordability and things like that as well. So those fundamentals are very, very strong at the moment.
Well, it's actually not just number of people. It's also household formation and demographics. So we're seeing the sort of people that are moving into households changing as well. So if we're looking at the big drivers, yes, more people, but it's also got to do with millennials now starting families. So they're moving out of apartments, moving into they'd love to have the same lifestyle locations that they've enjoyed the last couple of years, close to the CBD, close to the action, but they're wanting an extra bedroom or two for their children. So the millennials are moving out seeking detached homes, while older Australians, the baby boomers, are often right-sizing and wanting to stay in the same location. Having said that, both those groups are finding it difficult to find properties or affordable properties, Brett.
It's interesting, isn't it? Because both of those demographic types are very, very different, but they're targeting a similar area and a similar product and location. And particularly the millennials, they're probably late in the family formation stage. They're moving out to those, middle ring suburbs because they need an extra bedroom. As you said, maybe they're starting a family. If they've got a family, they want a pet and they want a little bit of a courtyard and things like that as well. So they can't afford a house. They have to move too far out to get a house, and they're going to lose their affordability and their lifestyle that they liked in the inner city. They still want the coffee shops and the restaurants. And at the other end of the scale, we're seeing the baby boomers who, the family, kids are moving out of home finally. They're looking to right size. They're, looking for areas in a similar location. They don't want to see change or a true change. They still want to live close to their family, their friends, their doctors, their dentists, and their favourite restaurants and coffee shops. And again, they're looking for a similar thing as well. More low maintenance, not with the 4 or 5 bedrooms, maybe 2 or 3, but also something with a courtyard. And those types of people do prefer something on one level most of the time. So
yeah,
it's really playing out in those kinds of profiles, isn't it?
It is. So they're homeowners. And if you think about it, 70% of properties are owned by, purchased by homeowners. So while a lot of people listening to this and watching this are investors and thinking like investors, I think it's really important to understand what homeowners want, where homeowners are going to buy, where homeowners are going to be able to afford to buy or pay more. And because of that, that'll push up the value of the sort of property that investors own, but also the same demographics. Unfortunately, some baby boomers don't have a home and want to rent, but really, I don't know that that's the main target tenant, but there's a lot of younger families who rent and want to stay in, whether it's the school zone or where they want to live. The townhouses are becoming a very popular type of accommodation. In other words, some places they call them duplexes, largish modern accommodation, but on a compact block, Brett.
Yeah, that's right. And townhouses particular because they are low maintenance. Also villas is another one. You know,
Yep.
they're usually quite well low when they're not making those anymore and there's not many townhouses being built. So, you know, those two types of products are very, very popular at the moment, particularly with those kinds of shifts in demographics, and they're going to be in the most demand over the next 5 or 10 years. And I guess then there's the other side, isn't there, Michael, with the supply and what's happening with that at the moment?
Well, we know that the government wants us to build 1.2 million dwellings in a 5-year period, and we're already 1 year into that 5-year time frame, and we're just not building enough. Shane Oliver from AMP, the chief economist there, suggested a year or two ago that there was 200,000 dwelling shortfall. Now he's suggesting it could be 300,000 dwelling shortfall. So even if we build all those properties, we're not going to get enough to supply the demand. Recently, a major developer in Melbourne, who is now moving into state and overseas as well, Tim Gurner, who's done some really great developments, has suggested that there's actually going to be at least 15 years of rental shortfall, just not enough accommodation. Now, the government is encouraging build to rent accommodation, but they're talking smallish numbers, and these won't be affordable. They're going to be in good locations where people will have the security of long-term tenure, but the developers are basically institutions, super funds, overseas investors, and they're only going to build them if there's good profits in them. So we're just not building enough accommodation. At the same time, builders can't make developments financially viable. With interest rates falling, that'll start to help a little bit. And with property values increasing, that will eventually then make new developments viable. But for them to be so, established properties, particularly apartments, are going to have to increase in value. So at the moment, we can buy established family-friendly apartments, villa units, townhouses, and even houses substantially below the replacement cost. And that's been a long time since we've been seeing that in the market, Brett.
Well, yeah, we go back to a decade ago, and I read an article the other day suggesting we're about 60% behind the numbers being built over that time 10 years ago. So that's a significant amount. As you said, I mean, in most cases, construction costs have gone through the roof. Prices haven't kept up. So that's the first thing actually, you know, affecting supply in the market is actually getting to a point where prices do rise and we can actually start making a profit for some of those developers and properties being built. That's some time away. And in the meantime, there's a huge amount of planning delays.
Yes.
Are being held up and going through council, then local government, and then federal government. There's zoning constraints and issues there as well, and there's issues with unions and all kinds of things. And you mentioned an alarming figure there, Michael. I know we're a long, long way away from this being fixed, but for Tim Gurner to say 15 years is quite extraordinary. And I thought it would have been around 5 or 10 years, but it's likelihood it could be that long, couldn't it?
Well, interestingly, I just interviewed Tim Reardon, the chief economist of the HIA, for this podcast. He and the HIA came up with the figure that in New South Wales, and in fact around Australia, but New South Wales in particular, close to 50% of the cost of a new dwelling is actually taxes, local taxes, state taxes, and federal taxes, including GST. And the governments have become addicted to that, onto stamp duty, into land tax, and to development levies. And we know the government hasn't got enough money, so it's not going to suddenly get rid of these to speed up and make it quicker and easier to build affordable accommodation. So that's really one of the other challenges, that in many locations affordability has hit a ceiling, particularly in blue-collar areas. And that's why in Metropole we recommend investing in locations with rising income, not where prices are necessarily cheap. Brett, how do you see this two-tier market playing out over the next year or two?
I certainly started seeing playing out. I think, first of all, I think in those blue chip locations with higher incomes, the cycle tends to go on a little bit longer. And we're starting to see a little bit like that now in Brisbane, in those areas, and probably Sydney as well. And then obviously people with rising incomes, the history and the research we see is after a boom, those middle ring suburbs with higher incomes recover a lot quicker. They've got higher savings rates. They're not just relying on their incomes. They've got other avenues to produce income, and they're actually recovering for a year or two and getting going again. Whereas those second tier markets further out, they go through these boom periods and sometimes could take 5 or 10 years to recover and go again. So it certainly is creating that two-tier market. I think everyone's probably done quite well in the last decade because of properties price rising everywhere, but that's going to be very different in the next 5 or 10 years. And we're just starting to see that play out a little bit in Melbourne as well. That affordability issue is starting to come through now. First home buyers are getting grants and things as well. So that'll repeat itself in Melbourne as well.
Well, affordability is important. So it's a combination of interest rates, and with interest rates falling, that's going to be a positive. And we know that the market often moves before interest rates actually drop, with the anticipation of buyers thinking, oh, I know now interest rates aren't going to keep going up. I'm not going to get caught out. I'll get in before the crowd. And others are getting in before the crowd because of the grants that are coming in on the 1st of January 2026. First home buyers are going to be able to buy a property with a 5% deposit, with the government basically underwriting the lender's mortgage insurance and guaranteeing them. So if you've got 5% deposit plus stamp duty, you still need serviceability. That's going to push the market forward. So as we're looking at drivers of our property markets, it's interest rates, it's affordability, but it's also access to credit. At the moment, the banks are still being a little bit tight-fisted. APRA's still got that 3% buffer there, a bit of a handbrake. Do you think that's going to ease at some time and banks are going to lend us a little bit more?
Yeah, I think at the time of the cycle, I think once we get through this interest rate cycle and we get to a neutral point, probably potentially 2 or 3, probably 2 to 4 more interest rate cuts, as some people are saying. I think once we get to that, it's all played out. I think that's when they'll look at adjusting, and it probably won't be until the new year. But, if we get another 0.5 to 0.75% interest rate cut and then 0.5% off the buffer, that'll certainly help people's affordability. And
well,
particularly
the various banks have got different ideas of how many interest rate cuts are going to happen or when they're going to happen, but they all believe they are. So we don't really know exactly what the neutral rate is going to be, where the interest rate isn't expansionary, in other words, driving the economy up and creating inflation again, but it's not actually restrictive. It is at the moment. So they've got to drop it to a point where it works. And then if there are overseas issues, tariff issues, world economic problems, wars that are going to put some countries into recession or slow down their economies, the Reserve Bank is likely to drop interest rates to stimulate the economy, to grease the wheels of industry like it did in COVID. So all the money market agrees that there's at least 2 interest rate cuts, and some of the banks, as you say, are even suggesting 4. So let's see how that plays out. But that's got to be positive for property. Earlier this year, there was a lot of issues, concerns about what's going to happen with the election and what's the government policies going to be. Now that's really old news and very clear cut that we've got a Labor government for a while. Their policies are pro-property, Brett. They're talking about a big Australia. There's no argument that we're going to bring lots more people in. We've already mentioned the first home buyer schemes. So in general, all those things are going to be positive. However, some of the state governments could well continue their anti-investor rhetoric and make it a bit harder for landlords and a little bit easier for tenants.
It's amazing, isn't it? We're the only ones who are providing housing at this stage. And, I think by punishing them, it's quite amazing. But they are addicted to money. And look, I know Victoria brought in a lot of land tax and a lot of regulations. I'd be disappointed, but I wouldn't be surprised if other state governments follow that once they work out they can get away with it. So that's really important. But I guess from an investment perspective, you've got to keep those things in mind. But it will be owner-occupiers that drive markets. They're looking to bring in build-to-rent schemes as well. They're looking at speeding up and fast-tracking approvals. So look at areas where that's happening. But as we've spoken about on previous podcasts, Michael, you don't want to buy in those areas where there's huge apartments going up and build-to-rent schemes and there's all these apartments being built and lifestyle precincts. You want to be close enough to benefit. So you've got to understand the local area and have a greater level of perspective on that as well.
Now, having said that, some investors are getting out of property or moving to other states because of the taxes. I wouldn't sell a property in one state to move to another because of land tax. First of all, land tax is tax deductible. Secondly, as you said, if one state gets away with it, others are going to see that as an opportunity as well. So I think we just have to plan. You've got to have a financial strategy in place. Only a couple of weeks ago, we did a podcast where you talked about the importance of having a financial buffer to see things through. By the way, if you haven't listened to that episode with Brett, after you've listened to today's show, just go back wherever you're watching or listening to this and have a look, because that's the way you recommended, and I agree. We actually help our clients at Metropole ride the ups and downs of the cycle. So these tax changes, they're going to keep happening. It's just the environment we work in. It's not a fine for being a property investor. It's a fee, in my mind, for being in the market. And it's just a cost of doing business, Brett.
Well, yeah, I mean, you always talk about playing the game of property investing, and it's just another rule that gets brought in, just like they do in other sports. They bring in new rules and new regulations, and you've got to adapt and you've got to change. But I think also having people who knows how to make the most of those situations and I guess transform that into action is really important, having someone on your side that can do that.
Definitely. So as we go through what we believe is going to be driving our property markets over the next years, decades, I think one of the other things is wages, inflation, cost of living. We know that there've been major factors in affordability, and that's happening unevenly. The cost of living still remains high. So while inflation has not growing as much and it's coming under control of into the Reserve Bank's preferred range, that doesn't actually mean that the cost of living is getting less. And so people are still having some trouble because wages aren't going up as much as that. But it's actually not even. It doesn't affect everyone the same, does it?
Look, I think this is a real shame, particularly this cost of living thing. I think a lot of people who vote for these types of things are the ones that are being affected. We're at a time where we've got this energy transition that's not happening evenly enough. It's pretty one-sided. So I'd be buying in areas where people can afford to pay higher living expenses. Their incomes aren't fixed. They've got the ability to earn more income and maybe have a second income or something like that. So those inner to middle ring suburbs for me are very, very important because you've got a demographic where you're generally getting double incomes, you're getting professional people. And then at the other end, you've got those people who have ridden out, their life and they're heading in towards retirement. They're set up quite well. But you really got to get into those areas that are safe. Unfortunately, those cost of living pressures aren't going to change. And that's a real shame. It's going to put a real divide into this country.
Unfortunately, it will. So as we talk about all the forces driving our property markets moving forward, I think a big one, and it almost encompasses all those others, is consumer confidence. In other words, if people feel confident about their financial future, about their economic future, about life in general, they'll make big decisions like buying homes. And if they don't, they put off those decisions. Confidence is everything. But we're seeing early signs with better auction clearance rates, lots more buyer inquiries. But Westpac does a very detailed survey of buyer confidence and consumer confidence. And it actually asks the participants of the survey, what do you think is going to happen to property values? Do you think it's a good time to buy property? Do you think it's a good time to buy cars and electrical goods as well? It breaks it down significantly. But there has definitely, over the last months, been a change in consumer confidence, and the expectation is for prices to increase, and more Australians are feeling it's a good time to buy a property. However, overall, there's still less consumer confidence than a few years ago. In other words, there's actually a few more pessimists than there are optimists around. But I think as all this changes, as the world moves on, as interest rates fall, as the economy clears up, that's going to make a big difference. But we've already noticed on the ground increased buyer confidence, haven't we, Brett?
We certainly have. And Michael, I think that's really important that you separate fact from emotion. And this is a good way to do it because, consumer confidence is ticking up. If you look at lender activity, home buyers are getting back into the market now, especially with these incentives. Investors are getting back in also because rents are quite strong and they're getting a good return there. There's a bit of uncertainty in the stock market. So if these things are pointing in one direction and people are believing the economy is going to do well, economists are going to believe the economy is doing well as well, then there's no reason why house prices won't increase in value and shouldn't. So if you can separate the emotion away from that, I think it's a great opportunity at the moment, particularly over the next 3 to 4 months when we know interest rates are coming down. There'll be more confidence in the market. And we're certainly seeing that at ground level, particularly in those inner to middle ring suburbs we've talked about, because there's demand in those suburbs. But the other thing as well, there's a complete lack of supply and probably 5 or 10% below long-term averages for what's usually on the market. And that's creating a bit of a perfect storm.
Isn't it? So all these things are converging right now and creating, as you say, a window of opportunity before the market moves to the next cycle, because consumer confidence has a lot to do with what the media tells it. So when in due course, each week they report auction clearance rates are getting higher, property values keep increasing, they see the sale of the property down the end of their street or an auction and property values keep going up. Buyer confidence improves before seller confidence, but buyers get in and then sellers think, oh, it's time for me to sell up and move up, because most sellers are buyers. They actually sell to move to another house. So I can see all this converging to be a good year for property. And eventually FOMO kicks in, greed. I mean, we're humans, so we are driven by fear and greed. So FOMO kicks in, while at the last year or two, there's been maybe the opposite, phobia, the fear of buying early. But I'm going to suggest that if you've been watching this, listening to this and hearing what Brett and I have had to say, if you're in a financially stable position and thinking of buying your next home or an investment property, maybe this is the right time for you. Because in property, like in life, you don't get rewarded for waiting. You get rewarded for acting with clarity, while others are sort of waiting for it all to become certain. The fact is, the smart money is already on the move. We're seeing that. We're seeing that in property values going up. We're seeing that in all the inquiries that coming to us at Metropole. So what about you? Are you clear how to take advantage of these market conditions, or are you still waiting for certainty? And that's where our complimentary wealth discovery sessions come in. We're offering you the opportunity to have a one-on-one chat with the Metropole Wealth Strategist. Go to metropole.com.au. I'll leave a link in the show notes, but metropole.com.au, and let us help you clarify your financial goals, see what you want to achieve, see is it realistic in the timeframes. Let us help you understand what all these factors Brett and I were talking about, the macro factors, the trends, could affect your position. And we'll show you how we help our clients by starting off building a personalized, data-driven, strategic property plan, and that'll allow you to get ahead of the curve before everyone else piles in. It's no cost, no obligation to this initial chat, so just go to metropole.com.au and book a time with one of our wealth strategists. Brett, we've discussed a lot. I think it's now a good time to take action. What advice would you give to somebody who's watched this through listening to us and thinking, should I or shouldn't I get into the market?
Yeah, look, Michael, that first session you just mentioned there is quite comprehensive. We get into a lot of detail and a lot of information. So for someone who's thinking about it, it's actually going to cost you nothing. And, you could be in a good position in the next month or two if you're deciding to move forward to do that. I'd hate to be in a position where late this year, when interest rates come down and the market keeps moving, all of a sudden I'm interested in looking at things and I'm not buying again until next year, because you would have missed a great opportunity and it would have cost you absolutely nothing to get your ducks in a row. Ignore the noise. If you're thinking about it, act early, get in, have a strategic update and plan and understand where you are, and then you'll have the ability and the confidence to move forward and take action.
Fantastic. Well, thanks a lot, Brett. Look forward to catching up with you again next week for the next show.
Thanks, Michael. Good to be with you.
If you're a regular viewer or listener, you'd know that each week I've been recently running a property trivia question to allow you, my listeners and viewers, the opportunity to win a hard copy of one of my best-selling books, How to Grow a Multi-Million-Dollar Property Portfolio in Your Spare Time. Now, just go to propertytrivia.com.au and enter the answer to the question I'm about to ask you. And each week, 3 correct answers will win a hard copy of my book. And everyone who enters is going to get a report as well. And I'm going to be updating that report so you keep getting different ones if you've tried before. But don't worry if you're listening to a slightly older episode, your entry will still count. So this week's question is, what's the name of the financial strategy where investors pay only interest on their mortgage for a period of time rather than principal and interest? I thought I'd come up with a pretty simple, easy one. It's not a trick question. What is the name of the finance strategy where an investor pays only interest only on their mortgage rather than principal and interest? Go to propertytrivia.com.au and leave your answer. Boy, you must know the answer to this one.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I want to talk to you about an ancient Chinese proverb that I read a while ago. Apparently, a minister approached the king and asked, if one person came to you and claimed there was a tiger in the marketplace, would you believe it? And the king replied, no, of course not. The minister continued, what if 2 people claimed there was a tiger in the marketplace? And the king paused and said, I might think, I might begin to have some doubts. Finally, the minister asked, and what if 3 people all insisted there was a tiger in the marketplace? And the king responded, well, if 3 people claimed it, I'd believe there's a tiger. And the minister concluded, Your Majesty, there is no tiger in the marketplace. Yet with enough voices, even the most absurd claim can seem true. Now, I've read about this before. The story is often referred to 3 men make a tiger, but it offers an important lesson that repetition can create the illusion of reality. The illusion truth effect says that consistent, repeated exposures to a statement will increase the likelihood that we believe it to be true, even if it's false. In other words, if you're told something over and over again, it'll be taken in your mind as a truth. There are a number of implications of this idea, but I'm most interested in how it could relate to a few areas of your life. Firstly, the mountains you choose to climb. Throughout your early years, you're told that the path to be a happy, have a successful life is making money and accumulating things. This is the mountain that people tell you to climb, so it's the mountain you eventually accept as your own. Remember what I said, 3 men make a tiger. So the other area where it affects you is the stories you tell yourself. Your internal voice repeats certain stories about who you are, about what you're capable of.Ose stories are repeated so often that they take hold as truth and they control your actions and the outside world. Remember, your thoughts lead to your feelings lead to your actions lead to your result. So your inner thoughts lead to the outside world. If you tell yourself you aren't capable, you start to believe it. You start shrinking. You match your belief. Again, 3 men make a tiger. The real wisdom here is not to ignore the voices of the crowd. After all, sometimes if 3 people say there's a tiger in the marketplace, there may actually be a tiger in the marketplace. The real wisdom is to pause before you default into believing them. Cultivate an independent mindset. Question the assumptions you've been told about the mountains you should climb. Question the stories you tell yourself. My message is pause and question whether the tiger is real. Thank you for spending the last little while with me. I hope you got some benefit from this show. But before you move on to the next podcast you're going to listen to, let me remind you I have another show that I produce once a week with leading demographer Simon Kirstenmacher. We call that Demographics Decoded, where Simon and I unveil the trends that are going to shape your future. In my mind, this is a must-listen to podcast for anyone interested in property investment, but also for business people and entrepreneurs. So if you don't currently subscribe to Demographics Decoded, just please stop for a second and subscribe on your podcast app where you're listening to this or on YouTube. And of course, if you don't subscribe to this show, the Michael Yardney Podcast, why not click the link that says follow or subscribe wherever you're listening right now. So twice a week, you're going to get benefit from my guests and me. And I'd like to ask you a little favour, please. If you did enjoy today's show and you know somebody who would also benefit, please tell them about the Michael Yardney Podcast and Demographics Decoded. There's a share button on every podcast app. On Apple Podcast, there are 3 little buttons at the top of the player. Or just tell them about it. Just have a chat with them. Now, I hope you're going to be doing them a favour, and you're definitely going to be doing me a favour in my quest to help as many people as possible to become financially literate. And by the way, I've got a special bonus for you. As my way of saying thank you for subscribing, just go to podcastbonus.com.au. There'll be a link in the show notes, podcastbonus.com.au, where I've got a bunch of ebooks and reports. It's just my way of saying thank you for taking the time to listen. And remember, the information that we give you in this podcast is general information, not specific information about your personal circumstances, because we don't know about them. But if you do want specific information, you can always have a chat with my team at Metropole. Go to metropole.com.au. If you really want to learn more, you can always listen to the previous podcast, the many episodes we've already published. Just go back to the old episodes, which each have lessons about property investment, success, and money. Once again, thanks for listening to today's show.
Thanks for listening to this episode of the Michael Yardney Podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney Podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael, but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?